Chamath thinks the low-end software market is basically dead. High-end software may be safer, but even that part of the market is going through a valuation reset. Going forward, he believes capital will concentrate in companies with strong net dollar retention, predictable negative churn, and deeply embedded enterprise customer relationships.
The low end of the market is basically finished. I think there is no safe space. I think the high end of the market, where Mark operates, where the large monoliths operate, is quite safe. And the tell was this week. The deployment company deal basically shows you what OpenAI is running into. So, you have to put in $4 billion. You get all of these folks. You gave them a 17.5% preferred guaranteed return. For what? Essentially to stand up a competitor to Ernst & Young, Anderson, Deloitte, PwC, Cognizant, etc. If you just look at that, that doesn't actually mathematically make that much sense if you look at what those companies are actually trading at. But why is OpenAI doing this? I think why is because at the high end of the market, where all the action is, what people are finding is, hey, hold on a second, this is a lot harder than we thought. It's not like boop, 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 put in a prompt and beep, bap, boop, it all works. It's not how it works. And so I think
good point.
I think we're a little oversold. And I think this consolidation and the re-rating can happen in the opposite direction. So what is the opposite trade? The opposite trade is who has constructive net dollar retention, who has negative churn that's been really predictable, which is a way of saying who has the best relationships. Meaning they're inside the CXOs and the C-suite. They have relationships with the CEOs and they're trusted. And they've been around for 20 years. Those guys, I think, are positioned to crush. Because eventually, Jason, the next trade that has to happen is when the public markets become a little bit less breathless about AI. And they ask one simple question. Okay, guys, you've spent $3 trillion in the last 4 years. What is the ROI of these tokens? And what's going to happen is they're going to have to go to guys like Mark and other people and say, please sell my tokens. And that's the next shoe to drop. If you had to ask me. So I think you're going to see these revenues, which are like way out of whack, like the multiples on revenue, multiples on assets, they're not even multiples of EBITDA yet. Those will come way back down. And I think these go back up and you'll find a balance.